It is January 5th, 2020. I'm not even used to saying it. Did you just say 2020? 2020? I'm not quite sure. But pretty excited for that. Anybody in here have a working knowledge of, has gotten a loan or understands the process at all? Just kind of getting a feel. There's a bubble if you guys can type in it, just where you are. We have a couple people on today. Just trying to get an idea of where you guys all might be. I'm going to keep my chat box right here. And maybe nobody can chat. It's a little bubble. When I say hello, it should type up or right now you can see it, and then everybody can answer. So we are recording, and we're just going to get started here. I am recording that, which is good. Hopefully I will be able to send it to everybody. I wanted to do this today because it just seems like there's a lot of different changes that are going on, and there's just a lot of misinformation. I know that some of you have been getting texts from me and probably heard from me, and it's been a very interesting year in my world. I started off in my 20s as an appraiser, a mortgage broker, then a processor, then an underwriter, and then during the mortgage crisis, I audited underwriting, right? And I kind of got really burned out sitting in a cubicle, so I decided I was going to do something crazy to sell real estate. And we started this program, Here's Housing. Our company, my business grew. We ended up opening our own real estate company. Got close to 30 realtors now. And I realized the best way for me to support our realtors is really, because we do a first time buyer program where we give you guys a contribution. Here's Housing, we give a contribution. So the best way that I could help them grow their business was to come back in the lending side. And that's kind of what I know best, right? So when you hear me talk, it's going to be funny because I was a realtor and I was a very successful realtor. I no longer sell real estate. I handle the financing side with my realtor partners all over Florida, Texas, South Carolina, and other states as well. But I wanted to do this tonight. We're getting ready to start the year. I'm trying to do these Ask the Experts every week and bring in experts. We're going to have a home inspector come on. We're going to have an appraiser come on, title company. So every week on Sunday night, we're going to record a different Ask the Expert. And it's going to give you guys a chance to hear just a little blurb about what they do in the process so you understand it. And my thought is by the time, even if you're a year out from buying, by the time you finish these, you're going to be, you have a chance to ask different questions. And there's no secret question. B, the more you know and understand the process, the more comfortable you're going to feel. And this is going to be one of the biggest, normally the biggest things that most people ever do. And we got to take it serious. And knowledge is power. No matter who, what, where, if you are a realtor, if you have a realtor, I don't care. This is, I'm doing this so that everybody can be aware. I'm also doing this for our clients at the same time. So I have people that are coming in and out that are clients of mine, and then we'll have our realtors on here. So what I want to start with tonight first, okay? First, let's just start with the basic loan types. You have your conventional loan, what they call an FHA loan. Conventional loan is your typical loan. FHA is insured by the government. VA is a veterans loan for different military people that have been in the military. It is insured by the government. And then the USDA. So we're going to go over all those different types of loans today. Conventional. What is a conventional loan? Conventional loan used to be, in the old days, you got to bring 20% down so you can get a mortgage, and that's how it was. And that's no longer the case, thank goodness. But it's not backed by Fannie Mae, Freddie Mac. It's actually Fannie Mae and Freddie who turns around and sells it to the secondary market. The rates on conventional, especially like right now, can be lower. Sometimes they can be higher. Actually, right now they're a tad bit higher. And the guidelines are tighter, right? and you need 5% down. Home Ready, they do a program for 3% down. So, like, I'm saying this, and you're probably going, well, why would I ever want to go conventional? The one thing I like about conventional, I don't like seller concessions being 3%. I like the fact that the conventional mortgage insurance drops off when it gets to 80%, right? It automatically drops off at 78. But if you know that your house is an LTV of 80%, you can call, and if you've not been late that year on your mortgage, they will bring somebody out to do an appraisal, and they will take off the mortgage insurance. So let's just kind of slow down just a little bit so I can explain. Mortgage is when you find the house and you go to a lender and you said that you would love to get a home, and you basically write a note and you are promising to pay back for that home, right? Different types of companies you get mortgages from. Well, there's this thing called mortgage insurance, because the higher the loan to value, I mean, the house is worth $100,000 and you get an $80,000 loan, you're at 80% loan to value, right? The higher the loan to value, the higher the risk. The higher the loan to value, the more chance people are just going to walk away. So, hello, Mr. White. We just started. This is recorded, so if you missed something, you can come back and watch. Right now, we are just kind of getting started going to the conventional financing part. And I was talking about the mortgage insurance. So the higher the loan amount, and the more you have to pay more mortgage insurance. So can you get a 93% conventional mortgage? Yes, you will have mortgage insurance. What do I like about conventional? Why do I think conventional is a pro in my book sometimes? Because that mortgage insurance goes away. The only way to get rid of FHA mortgage insurance is to refi, and that costs money, so that just is safe. So depending on where the rates are, right now, conventional rates just dropped. I mean, it changes every day, but that's kind of a conventional financing in a snapshot, right? You normally have to have higher credit, okay? The best benefit really is that the mortgage insurance goes away. A lot of people like the FHA loan. FHA loan, we do a lot of the FHA loans. I like the fun fact of FHA. 82% of FHA were first-time home buyers. The average credit score is 677. If you look down here to the right, the minimum credit score to get an FHA loan is 500. Right? Everybody seems to think it's 600, 620, 640. No, the minimum to get a 3.5% down FHA is 580. But if you wanted to buy a $100,000 house, and you had 10% down, you could do that with a 500 credit score. So that's kind of cool. Another thing about FHA is, the credit scores one, the guidelines themselves are less. A lot of times you'll see FHA partnered with some of these down payment assistance programs, and I'm sure we're gonna, we can talk about those when we finish this call. But the other thing is the average, if you see this debt to income is 40. The conventional debt to income is 28.36. What does that mean, you ask? Debt to income. So the amount of debt that you have in comparison to your income, if you make $1,000 a month and you have 800 in debt, then you're 80% debt to income, right? You make 3,000 a month and you've got 1,000, then you're at 30%. So that's kind of how that works. Conventional says we want 28% of your housing to be debt to income, and we want 36 to be your total debt. So that's another reason why conventional can be harder. Wherever you see FHA goes up, I saw an FHA at 49%, guys. Now, probably have better credit. I mean, there's definitely all these things are what they call compensating factors. So that is FHA, which I do. We do a lot of FHA. Pros and cons on VA. VA is a veteran-backed mortgage program, right? 0 down payment, no mortgage insurance at all. Debt to income is also higher, and there's no prepayment penalty, right? The downside is there is a funding fee. It has to be in your primary residence. And they say sellers might not accept your offer. Because most of the time, people with VA, they think, the thing that makes me super sad, I get calls all the time. I have a VA. I don't have to put any money down. No, it's a 0% down payment loan. Still have closing costs. So, okay, well, you know what? I talked to this company and they said they're just going to make the realtor cover the seller cover the closing costs. Okay, the seller covers the closing cost. You're having to raise the purchase price to make that hit. Makes sense? So I can come at, from a realtor standpoint, as a listing agent, if you think about it, if I'm selling my house for $200,000 and I need to now sell it for $210,000 so I can pay your closing costs, and it appraises at $210,000, well, I'm looking at my realtor going, well, why don't we list it for $210,000? Right? So yeah, sometimes you do get a little bit of pushback. It is not a given. Sellers will accept the offer. A lot of times what I have to coach people in is, again, this is real estate company owner hat, not lender. I coach my realtors into coaching their people. This is the deal. If you want the seller to pay all your closing costs, you cannot lowball them. Because the seller has a bottom line they want to sell that house for, right? They want to net $200,000 out of that house. They got to give you 10 to sell it. They got to sell it for 210 to net that. Who do you think's paying for the extra 10? They're not. You are. So yeah, can we get them going? Yeah. But it's not 100% financing. Another 100% is, I really like this one too, is USDA. Now, we're here in the middle of Tampa, Florida, metropolitan, so there's not a lot of USDA, but when you go into Lakeland and Prince City and Winter Haven and more of the urban areas, you'll find the USDA, and I love this loan program. No down payment, their interest rates are lower, the guidelines are lower, and the income requirements can be lower. So USDA is definitely something to look into, okay? And you just have to be out of the city, because it isn't, they also would call this like a farm loan. Those are the different types of loan types. Kind of want to just go over some mortgage stuff with you guys tonight, just real quick, and then what's going on. So one of the things is how much mortgage could you comfortably afford? So that's when we were talking about the housing expense, right? Rule of thumb, housing expense should be no more than 30% of your gross income. That's kind of like a rule of thumb, not compensating factors again, people. Sorry about that. What are current mortgage rates? Well, that is crazy to even say because they go up and down every single day, all day. They did go down at the new year, which is really good. But it's so funny. Last year was the same thing. Everybody get ready. Rates are going to go up. They went down again. They went up a little bit and then they went down. It just depends on the economy and it depends on the market. But you want to know where the rates are. I mean, you want to be able to start kind of paying attention, right? And every day, whatever it is that you're looking at, look at it the same every day. Don't look at different places. You got to get ready. Call me. What is your credit score? It's something important. I got this from NeighborWorks. I used to be one of the directors there for the housing centers. And I love all the stuff they put out. But this thing, know your credit score. We have a program that's really kind of cool. It's called the Wayfinder. I joke, I said, if there's a will, there's a way. And it's a model to be able to say, hey, if you do X, Y, and Z, you can pull your score out, right? Pretty cool. So if you think, I'm not 100% sure, don't go and spend a whole bunch of money at a credit place right now, right? Let's run your application or have somebody run the application. See if when they do it, say, hey, do you have a way to be able to look? Because I had a lady that was 570, right? And we pulled her through Wayfinder and we said, do X, Y, and Z. Well, if you get to 580, then we're going to give you this score, this credit, this interest rate. She did exactly what we said, and she ended up going over 620, and it ended up saving her $60 a month because she got an even lower interest rate, right? So knowing your credit score is important. There's Credit Karma, which is free, and annualcreditreport.com, which is free. I personally like myfico.com because myfico, with the credit report agencies, there's different models. There's like one that the mortgage company uses, one that car places use. MyFICO is kind of cool because it shows you all the different score models. Because you may think on my Credit Karma that you're at 620 and that's great, but then you pull this, and the mortgage one is different or opposite. So find one, just kind of like the rates, and stick with it and just check it. If you'd like me to do that for you and just do a run and we see what kind of tweaks you could do, it's free, right? And it'll tell you what things you need to pay off or don't pay off. The one thing that is scary is sometimes people think they have to pay collections off, and the second they do, it just like ruins their credit. So we want to make sure that doesn't happen. And then the fourth, how much do you have for down payment and closing costs? Now that we're getting ready to get our tax refunds back, this is a really good idea, one way to be able to save. I did, like today, I found another 100% company. The problem that I have with, we've got down payment assistance, I've got different companies that we could try with that. We've got like the city of Tampa has a $15,000 grant type of thing for down payment assistance. The problem I have with those is your interest rates, where like right now you could possibly get 3.875 on FHA. You can 5.5 for that. So, it just makes more sense to try to come out of your own pocket for the 3.5%. Because you're going to have to do one of two things, guys. You're going to have to refi out of it and spend $6,000 to refi, as well as the year or 2 years it took you to get the value to come up on the house, right? You're going to end up being also paid a year or two more on a mortgage payment. Now you're going to have to pay to refi. Don't do that. If you have to, like, I've got to move in the house and this is what I got to do. Well, okay, that's one thing. But if there's a way that you could come up with it, if you could get a loan from your parents, or if there's a way or a will, I'd say try to come up with a 3.5. If we got to fight for your closing costs from the seller, we can do that. But that's the story. So we are all here today is we want to talk about what are the changes for 2020. So FHA is one of them. A lot of them raised their loan limits. And FHA changed to 331. It was like 265, or then it went to 285 last year. So now it's up to 331, which is pretty cool. Conventional went up to 510,000. What it means for FHA to have a loan limit means that you can go up to the 331 and then right? Conventional, if you go over the 510 marker, you got to go to what they call a jumbo loan. Interest rates are higher. It's more expensive. I mean, kind of rude, but it is. You think that I have this whole story about this, guys. Like, you think if it was a $500,000 mortgage, the bank's making more money on the interest rate. Why do they have to hurt them and give them a jumbo rate? But who knows? Whatever, not my problem. But it is interesting to me. Conventional, I mean, USDA, no major changes, still a great product. Where USDA was a problem was when the government shut down. So if you think you want to get a USDA and you think we may have a government shutdown, you better run out and go get it. Because that was a pain in the neck. I lost a couple of deals last year with the government shutdown. The biggest changes that we want to talk about, I'm not sure if anybody in here this would affect, is VA. VA came out with the Blue Water Navy Vietnam Veterans Act of 2019. It's also known as the House Resolution of 299, and it just addresses Vietnam, Korea, Gulf War issues, and medical claims. But it also has another bill including the removal of VA loan limits. That is insane. They used to only, fund 100% financing to a certain amount. Now they fund it unlimited. You do have to qualify, but that's like amazing to me. I just think that's just crazy. So we talk about, they also, one of the things that they did, you see, Blue Water Navy amends existing guidelines to changes to expand the maximum guarantee for purchase, construction, and cash out refi loans greater than Freddie Mac conforming. So what they're saying is you can go higher than the 400 or 519 that the conventional does. The other change that isn't so great, and I had a couple right now that, like, my loan partner called me. She's like, we got to rework all these people because the funding fee went up. It was like 1.675 or something like that. It went up to 2.15, which is really tricky, guys. Explain to me, you have to get a funding fee to get a VA loan, and you're paying 2.5% for a funding fee, not 100% financing, right? Anyway, you can roll that in, which means you gotta roll the price up higher. And y'all can tell right now I'm not a fan of that, but you can do that. Under the new law, the VA funding fee for the first time buyer increased, so that is what increased from 1.6 something to 2.3. But it went away. It's not here. If you have received a VA Medal of Honor, then that is no longer the case. So you don't have any funding fee if you are a VA Medal of Honor. So that's kind of the basic things that have changed. And then I thought that I would open up the line for you guys to ask any question. Well, mortgage related, real estate related, personal. Any question that you guys may have that I might be able to help you. I'm going to unmute everybody. If you want to mute yourself right back, you can. So how's everybody doing tonight?
Fine.
Does anybody have any questions, or has anyone ever wondered anything? Anybody
Fine.
tips for anything? Is there anything that I mean, I'm surprised it took me 5 years to figure out I should go back to being a lender, but I not only was a lender, I audited underwriters, and what that means is people that approve the loans, I approve them. So if you've got funny questions and stuff like that, let me know. I might be able to help you with our situations. Anybody want to know about down payment assistance?
Yeah. Yes.
Okay, so I found one today. It's an Indian reservation one that looks kind of interesting. We have, like in the city of Tampa, we have this thing called Dare to Dream. Okay, and if you're a first responder, you can get an extra $5,000, so you can get $20,000. Problem is, oh my gosh, I just went with this guy, and you have to go to these housing counseling agencies, and I think I might actually do a webinar on that because I have their PowerPoint. And you've got to go, like we went on a Wednesday night, and we're there for an hour, and the guy just talked like a PowerPoint like this. And then you had to go back. And you had to make an appointment and you go with all your documents. And if you didn't have everything, you got to go back. Well, what I know is this. I used to be the director of NACA, and the government pays as housing counselors. I tell you right now, they would get paid $100 for everybody that would come into those meetings, and they would get paid $400 for every loan they'd help package to send in. So why do you think? I mean, I could go on all day about how I think that's wrong, but it seems like it makes it more difficult. And so I got this guy. He's willing and able, wants to buy a house, and he's got good credit. He went to the first meeting. He went to the second meeting, was missing one piece of information. Now he's going to go back tomorrow. Then they approve it, and then it goes into the city, and the city underwriter approves it. And then you're good for the certificate, and now one of our realtors can help him go buy a house. I joke that I'm retired by the time this guy's going to be done. I can't help him now because I am now just full-time lending. But so is he going to get the 15? Yeah. He'll probably get the 20 because he's the first responder. So for him, the benefit is worth jumping through the hoops, which I agree with, right? You have to have a 640 credit score. That's hard. So I like this new one that I found that is like a silent second, and you only have to have a 620 credit score. Both of them, the interest rates are a little bit higher. So, if you don't have the money to put down, this is a way to go. And then as the house appreciates, or if you want to go into something and do something and make it nice and make the value appreciate, then you can refi yourself out and to get into a better loan type. Just know that nowadays, those down payment assistance, Dare to Dream, they're silent seconds. They're not forgivable mortgages. Like you don't have to make a payment on it, but when you sell the house or refi it, that has to be paid off. Does that make sense?
Yes, makes sense.
Anybody? So a couple of things with, if you think that you have a credit score that's over 540, 550, let's run it and see. Because if we could get you to 580 and you've got the tax refund coming, and you could come up with, if you're looking at a $6,000, you could go that direction. If you're at 580 and go, you know what, I want to get to 620 and I want to be able to get down payment assistance, let's do an application. It's free. It costs my boss. I hope he never sees this. He's the one that pays for it. But it doesn't charge you. And I love it. It's called Wayfinder, and it actually really works. So actually, hey, Nicole, I think we thought it was an hour earlier. Just had someone jump on. But right now we're going through question and answer. Actually, it's kind of funny because I have a friend of mine's daughter who's on the call right now. And when her husband was in high school, I actually helped them undo a mortgage. They were back when I used to audit mortgages. So, the basic is 580 is the 3.5%. 620 is a goal if you want 100% financing. 640 could get you into like the Dare to Dream and those types. Who on the call could go with a VA loan? Who's got a military background that could go with the VA loan? Anyone? What about anybody that is on the call that is interested in living in a rural area? Because those are your 100% right there. So if you don't want to go live on a farm, that's really not.
Excuse me.
Yep.
The rural area, would that be considered somewhere like Selfner or something?
Yep.
Huh? Okay.
Yes,
that would be me. That would be me then.
Between Selfner and like Lakeland-ish, there's some pockets. You can go to the USDA, Google USDA loan map, right? And if you Google that, it's going to bring you up on a map, and it's going to show you where to see. put in an address and it'll tell you if you can get a USDA loan.
USDA. Okay.
Yep.
Okay.
So that's a great program, right? So if you're not looking in those areas, then the next you would be probably a Hillsborough County down payment assistance, because Sefner is not in the city of Tampa. Hillsborough County is they have a $7,500 down payment assistance, and it could go to 15, but they run out of money. I'm not sure if they're out of money yet or not. The hoops are not so many to jump through. You know, you probably just have to take the class online. I mean, taking the class like this online and getting a certificate call in a day is easy. But having to go into a place 2 and 3 different times, I mean, you're getting good money for it, but, you know, you want to, like, if you really, really want to go in that direction, let's set an appointment. We can do a webinar like this where it's just you and I, and let me look at your stuff, because remember, I worked at NeighborWorks. I was a director for NACA. I can help walk you through your stuff and tell you if you're going to pass or not. And, don't waste all that energy and time if you're not able to find out that your income's too high. So, does anybody else have any questions? Oh, you know what? Hey, Mr. White, I did. When did you fill it out? I haven't received that you had yet. I think that you were having a problem, and I had my assistant call you. And I think she resent you another link. And that would have been on Friday. And I am now actually certified to do mortgages in all 50 states, the United States. That's kind of cool. But it was a really hard test. So I was kind of like studying. I don't know what idiot signs up to take a test like that 2 days after New Year's, but I did nothing all Christmas and New Year's to prepare for that. Anybody have any other kind of questions? Is everybody on here like their goal is, I want to buy in 2020? Still sounds so weird. Y'all want to talk about when's the best time to buy?
Yes.
Because I think people don't understand that.
Yes, what's the best time?
Yeah, I'm going to tell you, I make 80% of my income between April and August. So do you think that's the best time to buy? When between April and August, everybody's trying to move, right? So everybody's trying to get in. They've got kids. They want to get situated in their new job. Everything's moving. Everything's happening. That's the best time to sell, right? The best time to buy is like right now. I closed on if y'all are my friends on Facebook, and if you're not, friend request me. You'll see this kid that we just sold a house to, my pastor's sons. And we got to hit $30,000 under. Hey, Nicole, go back. Tell them about the best time to buy now. 30,000 under asking price. We got it, right? Because nobody's buying right now. So when nobody's buying, people are trying to sell. You're going to get a better deal. When everybody's buying and everybody's moving, and you only have so many houses, you're going to start having bidding wars. Between April and I mean, it's mayhem and you love it, but I wouldn't recommend doing that time. I mean, this is like, as a realtor between April and August, I just say, look, if something hits the market, you better offer full price. Now, when you look at this, one of the things you want to look at when you're looking at houses, look at see how many days they're on the market. Because your negotiating power increases the longer it's been on the market, right? So right now, I mean, I have a house that's been on 171 days. Somebody buy it already. And it's a great house, and it's listed under value. But, it's the slowest time of the year. So I'm not just saying that because it's now. If you're going to buy, try to buy by April, or keep saving up and buy in September. Because between April and September, it is a free-for-all. And everybody and their mother's trying to get moved, and you're going to be competing. And, Nicole, you're on this call. I bet her mother's a realtor. Your mom would agree with me that between April and that's what kind of stinks in being a realtor. Okay, I'm not one anymore. But being a realtor, it stinks because you can't ever really go on vacations during the summer because that's your busiest time of year, right? So does that make sense to everybody? The best time to sell a house is between April and August. Definitely not the best time to buy. Anybody else have any questions? Nicole's on the call, which is going to bring into, and I hope you don't mind, I'm using you as an example, and you haven't even said hi yet. Hi, honey. And I know her. They have a situation where she works for family in construction and does not get like your typical pay stub, right? So what do you do with that? Well, now we have found a loan, and it's called a bank statement loan, and I used to do them way back in the day, and they take 12 months to 24 months of your bank statements, and they average your deposits. You have to be able to say that you are self-employed, which means you're 1099, right? You need an accountant or somebody, H&R Block or somebody who's certified to say, yes, they are self-employed. We don't need them to tell them what your income is. We need them to say, yes, you're self-employed. And they take your bank statements and they average your deposits to go into your bank statements. And that's where they come up with what your income is to go over your debt income. Isn't that kind of cool? Anyone? So Nicole, since I started that, do you have any questions about that? Anybody, I'm open for anything but teaching you how to commit mortgage fraud. I'm here tonight because it is recorded. Anyone? I think if you were interested in doing that bank statement loan, you need to 580 will get you a higher 580 credit score will get you a higher interest rate, and you'd have to definitely go back 2 years. I believe 620 they will only do it for 1 year, and you're in the low fives. So that's a pretty good deal, you know. If somebody has a job, because verifying income is sometimes one of the hardest things to do when you want to go buy a house. And I kind of, because I was a lender for so long and I did a lot of this stuff, I always find it intriguing learning as much as I can to find other kind of programs out there. And I was pretty excited about that one because we've got a couple of people that now we're able to, over in Orlando, that we're working with that we're using this loan for. So it's pretty exciting. And then when I was talking to Nicole and her husband, fiance, are good friends with my son, who's a realtor, and that's why they're on the call. And I've known them since they don't know that I've known them. I know their parents for a long time. So when he told me the situation, I'm like, you know what? That would be I think I have a program for them. So that's pretty exciting. Anybody else have any questions? Anyone? I did record this, so if you came on late, I'm going to turn around and send this out to everybody so that they can watch the recorded version. Would anyone mind telling us where you guys live? I think, you know, that Sabrina, you live somewhere by Sefner. Sandy, where do you live? Oh, you can't do that. What about you, Sophie?
Tampa.
Oh, you live in Tampa. So you could, are you looking at doing that Dare to Dream? What type of financing are you looking at doing?
Whichever one I'm available to do, because I don't know nothing about buying a home, so.
Well, I'm going to send you this recorded version. So your first step, honestly, always is finding out what your financing is going to be.
Mm-hmm.
And that's where when I was talking a little while ago about your debt to income. One of the things that they look at in debt to income, and next week, so what I'm doing, guys, is like this week we talked about changes. Next week, I'm going to talk about different ways you can cut your debt to prepare to be able to buy, right? I just had a lady that she had all the student loan debt, and you know what? God bless her. She's like totally changing her life and betting herself. But she thought because the student loans were in deferment that it wouldn't count against her for her debt to income, and it actually is the opposite. Because of that situation, because what happens is if it's in deferment, they'll take 1%. So let's say you've got $45,000 worth of student loan debt. How much is 1% of that? 45,000 be 450, right? They counted $450 against your income, that student loan debt. Now, once it comes out of deferment, it's going to be way less than that.
Mm-hmm.
So what we did when I learned from that was a kid that just bought a house that we just closed on last week, he paid $30,000. And he's like, Miss Scarlett, you know, I don't know what to do. They're only approving me this because I got the student loan. Pull it out of deferment. You have to start making your payment. Listen, not committing mortgage fraud here. I'm telling you, perfectly legitimate things you can do. Pull it out of deferment. Get your payments so that it's reporting at $20 each, so that you've got maybe $100 worth of student loan debt, and then go take classes the next semester after you buy your house and put it back in. That's a thought, right?
So there is a way to get the student debt handled without like it.
Yes. There's a
Okay.
way. Well, hypothetically, you may have student loan debt, then, right?
Yes.
And hypothetically, it's in deferment.
Yes.
Okay, so this is the thing. It needs to show up on your credit report that you pay $0 a month, or it needs to show up on your credit report whatever you pay. You can go to your student loan and get them to do an income-based or do something, right? Okay, let's just say this. If you were to start paying your student loan debt right now, what would you owe a month? Do you know?
Last time I did was about like $60 a month.
Okay. How much do you owe in student loan?
About I think about 24,000.
So if you don't pull it out of deferment, they're going to count it as if you owe $240 a month versus $60.
Oh.
Right? So you want to pull it out of deferment, and then can't you just go register for classes and put it back in deferment?
Yeah, I can.
Yeah, that's that's how that's definitely a way around it. And we're just kind of learning. I mean, another thing would be another really good thing, and I'm kind of giving away next week's class, but that's okay. Is credit. Some of you may not have any credit. So there's this thing called Experian Boost.
Oh, it does work.
Experian Boost. That thing works. I have this girl, oh my gosh, I cannot wait till she buys this house. Single mom. She's my daughter's age. She's like 28 years old. And she came to me with one credit score of 570. Right? I would say 2 months later, she said, pull it again now, Miss Scarlett. Let's see how it is. And she got the credit card, she did the Wayfinder, she did everything the Wayfinder did, told her to. And she found this thing called this Experian Boost thing. She goes, and I did it. And she pays her electric bill, her cell phone bill. There's a couple of bills that come out of one account every single month, right?
Right.
And because they go into your bank and they analyze your payments that you make, and if they can find stuff, her score ended up being 740, 760, and 780.
Mm.
So they count all the things that you pay monthly, even like rent or mortgage, rent.
Yep.
Stuff like that.
This is the thing, is if, like, I was so mad at myself. I thought, oh, I got all excited and I just jumped to go do it. Well, I'm the idiot that is not on auto pay. Who pays with one debit card one week? If I had a closing that week, the business may or may not have paid my cell phone bill. You know what I mean? So my husband and I have different debit cards, and it's like, hey, don't forget you got, you know, that it didn't work for us because we're not consistent enough. So what I would do is, especially if you're like, hey, you know what, I want to buy in so many months, I would set up auto pay or at least the same debit card and be consistent with that. Because that's going to fight whatever negative you have against you. That makes sense?
Yeah, it does.
Yeah.
I heard about that program, but I didn't think it worked. My mom talked about it.
It's for
And hers is
real.
like a 70/70 right now. Yeah,
It's for real.
it is real.
It's awesome. Not for me. It definitely made me, because I didn't even think about it. Like, we're so all over the place where, you know, my assistant, she's got it all, like all of our office stuff comes out every month because she has this auto pay. Like, that's a responsible thing to do. You know, so that would be something that I would recommend is set up your cell phone. Oh, what you don't want to set up, ready for this? Don't set up like your electric bill.
Don't?
Because the opposite's going to bite you. What did bite this sweet girl in the butt was for $330 utility bill, what we're using to pull her credit score up, right?
Mm-hmm.
You have to count it as a debt.
What? Because they have to pay it every month.
And I'm like, well, I totally fought it. And okay, well then let's take that out of it. You don't want to use it, then we're going to have to pull it out of our scoring model. And I'm not sure what's going to happen to a credit score. Like, so do it. It works. But try to do it with like a Metro cell phone bill. Or like things that are like $30, $50, $100.
Okay.
For housing, I don't think your rent, they would have to count that because you're getting new housing. So just come on at what it is now, and then it would be what it's going to be. That won't count as an ongoing debt because you're not going to still have rent and still have mortgage, right?
Right.
So just be cognizant of that. Like, if you're going to do the boost, do it with consistent but smaller amounts of things.
Like little like those little rented places.
Exactly.
Like errands and stuff like that, or engagement ring from ITC.
Oh yeah, you just got engaged. Everybody else congratulate him. Isn't that funny? I've never met him and I already know him. Did we have a wedding? Oh wait, did she say yes?
She said yes, but we had some problems. So I had a smaller ring. I'm going to go buy a bigger ring, and I'm going to plan for another day. I'll plan for another day. I'll pay like $5,000 for the ring. So. Women like diamonds. They like diamonds, but they like for their guys to be nice and consistent. So I'll try a little better this time. I have to get a house this year to top it off.
Okay,
so.
Can I just tell you something?
Uh-huh.
I need to meet her. I need to have a little chat with her. Because,
really?
See this thing right here? You see
Yeah.
That? Okay, I just got this on our 10-year anniversary. But this was my second marriage. My first marriage was disgusting diamond that I helped pay for. It was stupid. Second marriage, my husband's a captain of the fire department, right?
Mm-hmm.
Made okay money.
Right.
But we were, starting back over and trying to make ends meet and trying to buy something. And we went to Walmart and got a fake ring.
Oh, wow.
And what's funny is that we got married. I opened up my real estate business started. When I'm making $250,000 a year and I'm still wearing a fake diamond. You know why?
Right now?
No, we just exchanged it last December.
Okay.
Last December. I need to bring that diamond and talk to women. Because I did not, he bought it for me because he wanted me to have this ring. But for the longest time, I did not want to replace that ring because you know why? That is where we came from.
Right.
You know what I mean?
Yeah, from struggle.
Yeah, and and we built something. And we own our real estate company now, and I don't even sell real estate anymore. I do the lending stuff, and our family has been so blessed, and it started with that little fake diamond. Anyway, but yes, a diamond store, a jewelry store, monthly payment. That will, at least you got that going for you, the benefit, for
Yeah.
sure.
Okay.
So,
Okay.
have I made y'all laugh, really?
Laugh and heartwarming at the same time. It's good.
Well, I mean, and the other thing is especially because a lot of y'all came through like for a Facebook ad or something like that. I think it's good to kind of just get to know each other. That's why I say friend request me. It's not the one with the little stupid dog. That was I'm so old and dumb. When I got remarried, I just started in Facebook. So that the other one of me is like with my ex-husband. We were married 20 years, and so then when I got remarried with my husband, we started a new one. So there's a new one of me with my husband, like close up. It's not the one far away with the doggy. Friend request me. Get to know me, and you'll see, because this is the thing. If I don't do your loan and you've got someone else that does, get 2 quotes. I don't care. I'm going to be honest. I got no problem. I know what I do for our people. Because if y'all are first-time buyers, we pay for your appraisal, and the realtor gives you the $1,500 just by sitting through these classes. My realtors want you guys on these calls and want you educated because it makes the process so much easier for everybody.
Nah, you've been real helpful. So, this for a little while, about like 6, 7 months with me. So I'm definitely dealing with you. So
Yeah, I mean, I try. At first, though, what we didn't realize is that system was automatic, so you were getting stuff that wasn't me. So I think pretty much I turned most of it off. And like once a week or once every other week, I may say, hey, this is what we're doing. But
right.
our system was like blowing people up, and so I had to shut that out. Sorry about that. I'm glad you guys stuck with me through all that. But yeah, so I just think it's good. This is good. I had the ones that people could log in and watch, but they just seem so, I don't know, just like you just didn't get to see the real person,
So St. Petersburg area is really high, isn't it?
St. Petersburg, but you can still do, like Clearwater has a grant. St. Pete, I can look into it for you. But I definitely think for you, I also want to look at that new program that I found this week. The one that does the 100%, that your score doesn't have to be as high. And so we want to look at that.
What area was that?
And that's everywhere in Florida, so it doesn't matter.
Okay.
But for Sabrina, who says, I want to go live in Sefner, I don't care. Well, I say then, I would never want to put her in that loan because she could go get a loan at 3.5% interest rate at 100% financing.
I know Riverview and Brandon is kind of like a good place. It's low.
I like Riverview. Because there's a lot of new construction stuff over there. We can definitely help you. And this is the thing is, if y'all remember this, and I'm not trying to brag or be anything, just being really real. I own the company. So if I'm not doing your loan, I still want you to still buy. So if you say to me, hey, I got this cousin, I don't care. I mean, I would love to do it, but if it's not like I have to do this. New construction, I'm going to tell you right now, it's good for you to say you've got a lender, and our realtors are trained to negotiate the builders harder, but we can't usually be your lender, but knowing you've got one makes them give you more money. Does that make sense?
For the new constructive homes, right?
New construction homes, they pay a lot of your closing costs.
So it's good.
So it's good, yeah. And I can't beat that, which is totally fine. But if they know that, whatever realtor you work with, you'll probably work with my husband or my son. Everybody in here, I'm not quite sure, I could look up the names and tell you, is with one of the realtors in our office. So, and if you're not, and you're still under me, then I will assign you to one, depending on what area. Like I like to put you guys with a realtor that knows that area the best. I'm not going to put somebody who wants to live over in Seffner with our person that works South St. Pete. So unless you already have a realtor, then we already have a realtor. They're all great. But if you don't, a lot of the leads came in straight under me. I'll then assign you to one of them because as of this Friday, I will inactivating my real estate license because I'm only doing the loans and training our realtors. So I'm unbiased pretty much. I like all of them, but I'd rather if you don't have one and you were with me, then I'd rather put you with who I think is best in that area for you. Like if it's a builder in New Riverview, one that deals with those builders in Riverview and knows how far they can push them for closing costs and stuff like that.
Okay, so I just stepped out the car. So you basically saying that you don't handle the new construction homes, but your husband or your son does.
Yep.
Oh, well, then still in the family.
It's still in the family. I'm still there. Are you kidding me? I'll still show up. I just, because I'm a direct endorser for FHA, you can't have a real estate license. So as of Friday, since I just got nationally certified, I'm going to national. So that's okay. It's all good. But
Yeah, because I like the new homes, and I think that's a good look, the new homes. So long as I can keep it in the family, like
yeah, I'm all about it. I'm all about it. So, okay. But at least the thing is that what we'll do is we'll get you ready to tee you off to take you to the new builder. Because I think there's some things we need to do and need to fix. And like I said, especially if my husband's doing it, and it's fine. Let's get you ready. Let's get you prepared, and let's get you, so that when you walk into that builder, you're confident that when they do your pre-qual, it's going to pass.
So, but they want they still want 10% down of the.
Well, no, some of those we can, like for you, if you decide to do that, you go with Hillsborough County and get the 7,500 from Hillsborough County. That's what I see a lot of us doing over there in Riverview is the Hillsborough County down payment assistance.
Hi, I have a question. Is Ruskin in like Hillsborough County?
I should know that.
I think so.
I could ask my husband, who's a firefighter there for 30-something years. He would know.
I don't think that's Hillsborough County because Polk County is a little.
Is Ruskin and Hillsborough? What is? Are you sure it's not Pasco?
Yeah, because it's back over this side, right? Like Apollo and all that stuff like that.
What county is Ruskin, Florida in? Hillsborough.
Mhm.
You are a winner. But I think, though, I would look, if you're looking at, who asked about Ruskin?
My husband, Sabrina, my husband was asking. Hi.
So look in Ruskin and look in the zip code and check out USDA.
Okay.
It's in the like the farm areas, what they call it. It's not in Metro, So you might be able to find some over there too. USDA is the way to go. If you didn't, serve in the military, and I think sometimes USDA is better than the VA, to be honest.
That's true. It's a lot of military benefits over
there. Which is sad because you think military benefits, but the fact they just raised that funding fee makes me mad. I'm very resentful of that right
now. Okay. Because I know in Ruskin, they're building a lot of new construction homes there too.
Yeah. So, but you can do USDA with new construction.
Oh, okay.
Yeah. So if you would like, send me a message when you hang up. Say, hey, Spark, can you check out this area? And tomorrow when I get into the office, I'll check it out and send it to you.
Okay, thank you.
Just say, hey, USDA, me, check it out for me.
Okay.
And I'll remember because, let me tell you, if you could see what RKV Core, I'm on the back end. You've got all the different realtors. You've got 30 realtors, and they each have to be sending leads. But I'm that back person of all of them. So if I say something wrong on there and talk to the wrong, please forgive me. I've got like 3,000 people in there. My eye starts twitching. I told them they got to quit doing leads. We're actually going to slow it down. I've stopped actually doing it because I think that we got to get the system straight. So, and now we've got pretty much everybody in the office is taking the down payment assistant classes, the first time home buyer classes. But I wanted all the realtors to be, up to date on how to work these programs on the real estate side. So there's that. Anybody else have any questions? I love Sophie Lovely Lady's picture.
Thank you.
It says my own lane.
Yep.
Where are you looking?
I'm looking like, cause I live in Brandon, but I'm looking for like Riverview or maybe Ruskin area.
Oh, well, there you go. Now, are you looking at doing new construction too?
Yes.
Okay. So we will, there you go. We'll just put you and Mr. White together, not together because he's getting married, you know what I mean? But at least we'll know, like a different new construction neighborhood. But I would look too at seeing if you're doing, I think when you go into Ruskin, we might be looking at USDA as well.
Mm-hmm.
But if you want, send me a message and we can run your pre-qual and kind of take a look at where you are and see what we need to do the down payment assistance. Because you can do new construction builder loans with a DPA.
Mm-hmm.
It's doable.
Okay.
So most of the time, some builders may not, but we can, depending on where you want to look, we can set you up, get all that set up. So.
Okay.
One more question. For the USDA, what's the credit score has to be again?
I think it was 620, wasn't it?
620?
Yep, I believe so. Still my old thing. But I believe it was 620. Yeah, it's 620. It's not on here, but it's 620. I don't think it changed. USDA was the one oddball that didn't change anything this year, which is good. If you think and you don't know and you're not for sure what your score is, like I said, message me and I can have Grace. And if you press me on Facebook, you'll see. So when they hired me at this new company, they actually took my office manager of a real estate company. I said, "You want me to come? You got to take her." And they gave her a great job. And her only job is to babysit me. Is to, I think, like with you, Mr. White, right? She followed up with you, made sure that you had the link right, made sure you had everything you need. Grace is kind of the person, I say, like, I'm the kite out there, I love to go find the different programs that we have and learn the things and do the stuff. She's the person who keeps me grounded, make sure that we got the paperwork in right, the application's been done, and then she gives it to me, and then I figure out how we're going to make it work.
Okay.
Yeah, Grace reached out to you last week, right?
She did.
She is full of grace, what I call her. But up with me.
Well, I need her to send me another link because I was looking for it. I couldn't find it in my email. Probably I need to check my spam or something.
Probably.
I didn't see it in there. She said she sent it, but I didn't see it.
Oh, so did you do it then?
I registered, but like I said, that problem, it popped up. So she told me she's gonna send me another link. So I waited for her to send another link. That's why I texted you and said she had to send another one.
Oh yeah, because I thought I got a CC email, so I don't know, maybe she put it in. I'll make sure she does it in KV4 so it comes to your phone.
Okay.
She's got access to my KV4 and she can send him a text. But or she can just call you and do it, on the phone with you. Those are
Okay.
sometimes better. So if
think-
anybody wants to know where they are,
Yeah.
send me a message and I can have Grace call you tomorrow. And she can either send you a link or hand do it with you, and at least then sends you what we call a Wayfinder. Well, it is a Wayfinder report, and it tells you. Like I've got a friend of mine I went to middle school with. She actually was cool. Now I'm helping her buy a house. All she had to do was pay $100, and this is what was keeping her from buying a house. $140 credit card. She had to pay down to 10, and she had to open up another credit card, and she got up enough to be able to buy a house.
Mhm.
So you have no idea. I mean, it could be something as small, but Wayfinder is going to tell you what exact steps, and it's not a company that's going to charge you, a bunch of money every month.
Right.
So,
I have another question.
uh-huh.
As far as the assistant program, is it per household or per individual?
For which one?
Um, to apply for the assistant?
The down payment assistance?
Yes.
Okay, so the down payment assistance, I'm going to do that video for y'all next week. I might even do it tomorrow and just mail it to everybody. You get more assistance. Okay, let's put it this way. Say the income limit is 64,000,
Okay.
but if it's 2 people, it would be 88,000. If it's 3 people in the house, it'd be 190. If it's 4 people, you know what I mean? So it allows you to make more money to be able to get into it. It doesn't, or if your income is low and you have more people, you might be able to get 30,000 versus the 15.
Okay.
That is how
Okay.
that changes, yeah. And if you want, message me and then we can go through that tomorrow. I can go, okay, let's talk about this one, because you don't know these people. You don't want to tell me what your income, that would be a one-on-one conversation. We could definitely walk through that.
Mhm.
Okay.
But I do think I'm going to record like the overview of the city. And that's the city. Okay, well, let me correct myself. That's the city of Tampa. You are thinking about Ruskin and Riverview and those areas. That's going to be Hillsborough County, and that is only 7,500. But I think you only get 7,500, but I think your income cap can go higher the more people you have in your family.
Mhm.
Does that make sense?
Yes.
Anybody
Yeah.
else? Does that make sense? Okay. I was thinking about that. I answered this whole question with this, and then I go, wait a minute, she doesn't want to buy in the city of Tampa. She's already told me that.
Mhm.
So let me talk with, so yeah. Okay. No more questions? Well, I hope you guys become my friend on Facebook. And I hope to see you guys next week. We are going to probably go over down payment assistance next week for a little bit. I think I might just make that this week. It sounds like it might be something better to make this week. And then I really want to get a home inspector on here. So you guys can talk to, they can tell you what the inspection process is, why you need a home inspection, and things to look for when you're looking at houses so that you avoid having to pay for a home inspection and then walk away from a house. Right? So if you know the basic things to look for, they can help, they'll make things easier. And things that need to be done in order to get a home inspection. So we're going to do a home inspector 1 week. We're going to do title, what is title? How do I want to put the house in my name, his name, her name, our name, kind of thing. Those are really important questions. Who pays title? What is the service? Title question. So every week I'm going to try and bring in somebody else. I'm my own expert this week. How's that? But every week we're going to bring in other people so that you guys can ask those kind of questions. So, all righty. Well, I am going to go put my 4-year-old to bed. Hope you guys all have a fantastic night, and I appreciate you being on.
Thank you. You too.
All right. Thanks, guys.
Thank you.
Nobody else has any questions, right?
No.
No.
All right.
I'm all done. Yeah, guys, have a good night.
Good night, everybody. Thank you.
Thank you. Bye.